The Bitcoin Group, the American original. For over the last 10 seconds, the sharpest Satoshis, the best Bitcoins, the hardest cryptocurrency talk. We'd like to welcome our panelists. Dan Eve, the Crypto Raptor.
How do fine people?
Joshua Shigala from the Standard.io.
Oh,
Victoria Jones from Satoshi's Page.
Hello, everyone.
And I'm Thomas Hunt from the World Crypto Network. Moving on to issue 1, the price of Bitcoin. The price of Bitcoin is down 2.23% in the last 24 hours, with a last of 26,403, a high of 27,125, and a low of 25,857. That's $1 for 3,787 Satoshis. I fear it's that $25,000 number that will have people upset. Bitcoin prices slipped to 2 months lows as Coinbase's CoinDesk's Bitcoin trend indicator turns neutral from bullish. Dan Eve, everyone was happy just a few days ago. Now everyone is sad. What happened to the price of Bitcoin?
Well, I mean, there's obviously depends on which news source you check. There's people that blame socio-economical factors. They blame like the CPI changes and all sorts of inflation and stuff like that. But ultimately, the true reason is because last week I predicted the price would go up and therefore it had to go down. So I'm a consistent contra indicator. But what is quite good is that there's more evidence that the price of Bitcoin is decoupling from things like risk assets like the Nasdaq and stuff like that. So that's kind of a good thing, right? So we've always said that Bitcoin's time is when it's completely disassociated with any other market. It's not tracking any other market, or indices. So I suppose that is a positive thing. But it goes up, it goes down. It did have quite a meteoric rise, right? From you think from like mid-December at 15 point something K up to 30 something K. A month or two ago. So, it rose pretty fast, which it doubled up, and which is obviously what we're used to seeing. But at the same time, what goes up, comes down for a little bit before, it probably, goes a bit sideways again, because we are still we're just under 12 months, right? I think we're around 12 months before the halvening. I swear it was March, and then it's May. But anyway, it's May 2024. So, we should really start to see a bit more volatility, I think, as the hype seems to come along, and it comes in waves, right? So people hear about the halvening, they do some research, they buy some Bitcoin, the institutions buy some, but then they sell some, and then the other people buy some and sell some, the retail come in and buy some and sell some, and everything gets a bit hectic before obviously everything, moons post halvening. Be still pretty cool to see the Balaji's dream of $1 million Bitcoin before June come true, or in June. Although that's obviously that means it's got to go a pretty long way now to hit 1 million. But I'd still like to see it. I don't think it's going to happen, but I'd still like to see it go 40x in like a month or two and do a proper face melting, face ripping run. But ultimately, it goes up, it goes down. It's Bitcoin, and that's what we love.
Actually, looking at my notes here, Dan, people only like it when it disassociates and it goes up. They don't like it when it disassociates and goes down. That's not acceptable. Josh Shigala, the price of Bitcoin, it's wrecked. It's ruined. 25K.
yeah, it is what it is. That's it, right? It just goes up and it goes down. It's funny if the jeans go down at the shop, no one goes, "Oh, jeans are crap now. I'm not buying jeans again." They go, "Oh wow, jeans are on sale. I'm going to grab me some." Yeah, it's so weird when you think about an investment vehicle. If something is on sale, you're like, "Oh, it's dead in the water. I'm not going to buy it." Whereas really, it's like the other way around. You're buying jeans, whatever. Yeah, that's my not investment advice.
It does depend upon the stock, though, Josh. There's one stock, it keeps going down, and I keep buying, and it keeps going down. Victoria Jones, what do you think about the price of Bitcoin this week?
Well, it's just a blip, isn't it? I mean, we've come to expect this of Bitcoin. I mean, to be honest, it did have a good run and it was holding steady for quite a while. It's been a good few months that it's been in a range. So I think it's just kind of like lost steam, really. There's some reports that, some of the exchanges are running out of liquidity. So if a big seller comes along, that can push the price down because there aren't enough people, getting ready to buy. So yeah, I just think it's par for the course, really. I also think, there are difficult economic conditions. As much as we understand that Bitcoin is a solution, there are more and more people who understand that now, and it's gained tremendous value since it was first issued from nothing. So the price is still holding up pretty well. If I talk to my older parents about it, they just think the whole thing's unbelievable. So yeah, I mean, I think a 2% dip on an asset like Bitcoin is, nothing to lose sleep over.
It does seem like a disaster. But now, predicting against the Bitcoin predictor ball, the source of all truth and wisdom, no doubt, if you go look at the last episode, I'm sure the ball was right. It's right every single time. Dan Eve, will the price of Bitcoin be higher or lower this time next week?
Well, I'm going to say higher again because I can buy more when it's lower. Because it will go lower after I say higher.
Finally, using that reverse psychology in your favor, Josh Shigala, higher or lower? Now you're muted.
I like it. It's like George Costanza style. The Summer of George. So yeah, triangle is that one. If you divide that by the line, yeah, probably up. Cheers.
Whatever I think of doing, Jerry, I'll just do the opposite. Victoria Jones, higher or lower?
Well, you need one contrarian in the group, so I'll say lower.
Lower. And now the Bitcoin predictor ball. Will the price of Bitcoin be higher this time next week? Reply hazy. Try again. Oh, the Bitcoin predictor ball covering its basis there. Won't tell you anything. Moving on to issue 2. Bitcoin miners earning $40 million daily revenue as Ordinals debate splits developers. Miners have struggled as late, but the Ordinals craze is creating a windfall for the fortunate few. Developers aren't sure what to do as the Bitcoin blocks begin to fill up with JPEGs. Should they ban them? Should they fire them? Or should they allow the miners to make gobs of money from people paying to get their Ordinals onto the Bitcoin blockchain? Josh Shigala, what do you think about the latest in the Ordinals debate?
It reminds me of the good old days of the block size debate. We're back. And it's funny seeing all of these people that are here now that are kind of big in the space, but weren't here during the last sort of major scaling debate, now sort of saying, how am I meant to pay people? And how am I meant to, like just getting into the same arguments. And, it is a problem. Like, I'm not going to sit here and tell you that it's Bitcoin, don't worry, just buy it. I do feel it's a problem. I feel, I don't feel like what Roger Ver did was very good. I don't like the way he did it, but I do feel like there is something to bitch about and moan about. And I'm saying this as a business, as someone that's built a business in the space, who was told by a lot of very smart people that Bitcoin is the best, Bitcoin's perfect, Bitcoin scales, Bitcoin everything, and Lightning Network, yay. The problem is, it takes an online transaction to fund a Lightning channel. And if you haven't funded it, you're shit out of luck because it's just too expensive. I'm not saying we should make the block sizes terabytes big, and I'm not even saying we should double them. But I'm saying that there are issues that we need to think of, and there's a lot smarter people than me working on this problem. Bitcoin will solve it because where there's a will, there's a way. But as we know with any sort of crypto project or decentralized project, the longer it's been around, the harder it is to change it, the more solidified it becomes. And so I think there's going to be a lot of hot air. And I think the worst part, and I'll keep this short, but the worst part of these debates is that people get extremely passionate. They start slinging shit around at people that can't take it and don't know how to take it. They end up leaving the space, even though they're very intelligent and great people, and they can't take it because they're getting called, conspirators or Illuminati or whatever, because they're trying to break Bitcoin, or the other way around, because both sides are slinging crap at each other. And that's the worst part of it all, is that people that don't deserve it get beat verbally and cyberbullied really, really hard.
It could indeed cost us some more developers. Victoria Jones, what do you think? They've got NFTs on Bitcoin now. It's good for everybody, right?
Yeah, I think the last time I was on here talking about ordinals, I wasn't too impressed. So yeah, I mean, you're absolutely right. It does create a problem. But I think, in the nature of these things, it's a small problem, and Bitcoin's just being battle tested. It's still a robust network. The idea behind it is sound. No one's come up with anything better yet, even though everyone there are thousands of projects out there that maintain that they could be, but the market doesn't agree. And the fact that it's hard to change is partly what makes it so secure and robust. And there will be a solution out there. I mean, although it does cost in order to set up a Lightning channel, there are lots of Lightning nodes out there now. So it's not like the whole system breaks apart while we go through this temporary issue. But I think the temporary issue will certainly be part of what's causing the price to go down, because people lose confidence when they especially people who've not been around for a long time. They try and use it and it's just like, well, this is never going to work. I've got to pay 10 quid for a 5 quid transaction. That's not going to work. And operating the Lightning net, it's easy to use Lightning network, but I run my own Lightning node, and it's not easy. So it's not going to be something that the average person can just kind of pick up, which is going to be another limitation along the way. So yeah, it's not perfect, but it's still better than anything else we've got right now. So it's always easy to sling arrows at anything, but show me something better. Maybe I'll go over there. I haven't seen it yet.
I just love it when any of the NFT stories come up. I always think of the Star Trek episode, The Trouble with Tribbles. And at first you have these nice fuzzy tribbles and everyone thinks they're cute. And then they start multiplying and the tribbles are everywhere throughout the ship and they're eating the wiring and they're in everything. And I feel the same way about NFTs, but it's worse because I feel a little bit responsible. It's like I helped launch those curio cards on Ethereum, and then the NFTs really got going on Ethereum, and they got going so big on Ethereum, they spread back over onto Bitcoin again. And I'm like, maybe instead of the apple and the tree of knowledge and wisdom, we should have went with Pandora's box or Pandora's jar. Dan, Eve, what do you think about these rascally NFTs clogging up the Bitcoin network?
Well, it's definitely, yes, it's definitely bringing the emotions out again, and all the block size debate. You got the BSV like crowds. I think someone did some analysis and said that they believe that Ordinals is actually an attack from BSV, because a lot of the teams behind certain Ordinals are actually part from the BSV team, and they're trying to prove a point that that Bitcoin, when it's used, gets clogged, but you should use BSV's gigamegs and whatever else they have over there. Crazy people, like the flat earthers of Bitcoin, right? But anyway, wah, wah, wah. But it is the first time.
In case the freeway's clogged, you can always use my hovercraft.
Indeed, my Sky car. But I think it's the first time since 2017, recently, that the mining fees are more than the block reward, which is that's quite a big thing, I think, especially considering the block reward was twice as much in 2017. So this, in some respects, miners are making a lot more money, and this is like really good for their business model. will they ultimately care if it's being used for NFTs or not? I haven't really read much from this sort of mining community as to how that's going to go. But what is sort of also funny is obviously, you know, Bitcoin's about being censorship resistant, but there's all this talk of like, we should censor the transactions, and which I just think is kind of hilarious, because it goes against all the sort of, I think with Bitcoin, it seems like every couple of years there's this flip reverse of like principles of like censorship resistance. We should censor these transactions, and you know, and free market. No, it's a free market, but there shouldn't be an Ethereum. That shouldn't exist. You know, it's all kind of. I don't know. Some of it's a bit contradictory, right? I think that sometimes you build these pillars and they, you know, they become an obstacle when you're trying to argue something, a positive case for what you're working on. Like if you know, there's reasons why technology adapts and evolves and it changes. But yeah, funny, you know, like I still think back to Luke Deshear and his they tricked my node with their sneaky little tricks, you know, saying that they somehow, like, you know, almost trying to make out that his node was sort of infiltrated by the NFTs, when it was just, you know, it was just using Taproot and stuff. That's what they made. And people like not that I'm mocking this, I just think that some of it is funny, but people like saying to Max Kaiser, like, thanks for hosting my JPEGs on your full node. You know, so it's definitely brought a lot of cheekiness out of the woods, but it's brought back the discussion about scaling. It's showing the importance of Lightning, you know, making Bitcoin much more scalable, and also arguably from the kind of, you know, the Bitcoin is a store of value crowd, you know, who say that NFTs shouldn't be there. Surely they should almost be cheering it on, because by people not using it and it being full of JPEGs, then it means that it becomes more expensive and the store of value goes up, right? I don't know. So isn't that like a case for the store of value of Bitcoin? The fact that it's, you know, all the block space is used and blah blah blah. I don't know. There's too much to and fro, but yeah, ultimately. The block size debate is back. We've got, as Josh said, all the sort of new Bitcoiners who are hardcore Bitcoin, but you see them accidentally go, maybe we just need to increase the block size. Like, oh, you kind of weren't here in like 2017, that whole big thing. But all part of the fun. You know, it seems like the Ordinals crew may run out of money because it's costing them a lot for transactions. There's also like, isn't there like really cheap transactions that are paying $5 for like 10-cent transactions for being paid $5 fee? So whoever it is, if it is an attack, they're going to run out of money soon, in theory, and we'll go back to normal. Or the NFTs will just, you know, become more expensive because that will have its second wave with Ethereum and the rest of them, and then the Bitcoin blockchain will be more clogged. Crazy. I don't know. It's all a bit crazy for me. You young hip cats and your NFTs and JPEGs.
Well, it's interesting, Dan, because here in the United States, of course, everything has happened before. In the 1860s, the Republican Party was united with Lincoln and was stopping slavery. Then we go 110 years later, the Republican Party is using something called the Southern Strategy to unite essentially with the people who would have been enemies of Lincoln. So political parties have completely shifted and changed their polls before. Like you're saying, it's interesting to see Luke Deshear, who probably in the past would have sided with no censorship, no changing the blocks. But now, you know, years later, this happening, the next happening, ends up as a some kind of a small, like a pro-censorship guy. And I think this goes well into the exit question. Will the developers change the way that Bitcoin works to get rid of ordinals? Josh Shigala.
No, because it doesn't matter what the developers. Maybe there will be a developer and they'll put something in, and maybe it'll get that far, but it all depends on everybody else downloading the core software. Now, the issue that I've seen in the past, and I see in the future, is that we as a network don't run full nodes and don't run our own core software. We rely on our phones, which rely on somebody running a large node that feeds that phone data. Yeah, so let's see. I mean, I don't know. I don't know. I don't think so.
It's such a bad look. I wouldn't want to be that developer. It's such a, I'm taking my ball and going home. This is the Bitcoin network with no stupid JPEGs. It's such a negative position to be in. But I do think we have a person like that out there on the internet. We have a pattern matching system working where if we don't have that guy, we'll create him. Victoria Jones, what do you think? Will the developers change Bitcoin to get rid of ordinals?
Well, again, it's all about incentives, isn't it? I mean, who benefits? I mean, if the miners are benefiting right now, I mean, they're a big player in the whole ecosystem, so I can't see them voting it through. So I think Josh is right. You know, you may well get someone who comes up with a solution, but ultimately it depends on whether or not everyone who's involved in the system votes it in. And you're right. And you know, as Dan was saying earlier, you know, it's kind of antithetical to Bitcoin to censor anything anyway. I mean, I think let them do their thing. Eventually people will get bored. You know, it's I think, you know, and eventually Bitcoin will go back to being what it is. I mean, even people who are paying for ordinals, you know, they're paying a heck of a lot of money to try and protect it. And what's the guarantee that anyone's going to buy that in the future? I mean, even NFTs themselves are very much a niche thing. There's like a core group that are really interested in it, but you know, this is a technology that's meant to help solve a huge problem for humanity, and ultimately, I think that's what will win the battle. I'm not. I think it's annoying, but I'm not terribly worried. I think, you know, I think Bitcoin will carry on, and whoever's spending all these high fees to get these transactions done will run out of money or will run out of enthusiasm, and we'll be back to what we're normally doing. That's my view, anyway.
And I'd like to quickly add something for the big blockers out there, because you know, maybe they thought that I was for big blocks just with my talk back before. But if we allow, like, humans are insatiable with their amount of data. So if you have bigger blocks and the price to add data to those blocks is cheap, then you watch people just create, I don't know, like Mid-Journey images and just like on automate, you know, auto GPT them, bomb into that thing. And blocks are one of these things that they're cheap all the way, even to the last little bit that it's full. As soon as they're full, that's when the prices go up. So it's not like you're halfway and now it's a bit more expensive. No, it's cheap all the way till it gets full, and then it's bang, then it's hard. So you can create terabyte blocks. They will be filled because humans are insatiable for the amount of data that they want or need or can find use cases for. So even if they aren't legit, or even if they are legit, so there has to be a better way rather than just a simple block size upper.
Well, I've always thought one of the really great selling points for NFTs is that they are unique and that they are so unique. But that's also a downside. Like Victoria was saying, if you have a Bitcoin or a 0.1 or a 0.1 of a Bitcoin, and you want to trade it with someone else, you can, right? Any Bitcoin is the same as any other Bitcoin. They're fungible. But with that NFT, it is so unique that you have to drill down. You have to be like, does someone like the Bored Apes? Do they like Bored Apes with cigars? Do they like them with ski goggles? And if nobody likes the one with the cigar and the ski goggles, you might have one of an expensive set, and someone might buy it just because it's part of a set, but they might not want it because it's too unique, because it's too custom. And it's really interesting with curio cards. For whatever reason, we didn't get version numbers on there. It was in some of the ideas. So all the curio cards are fungible. If you have any number one curio card, you can trade it with any other one. You can't tell the difference. So it's this kind of unique mistake type success thing where people keep trading those cards. And I also thought of someone who would be great to create this new no fun Bitcoin. He's great at editing currencies and taking some out. My buddy Rhett, who created curio cards. He was great. He created Z Classic, It was like a Zcash without the founder's reward. So here we go. Bitcoin without the NFTs. Free idea to Rhett. Dan, Eve, what do you think? Will the developers change Bitcoin? Get rid of these ordinals?
Now, I think I'm with the panel that they may, but it needs to be voted in. But one thing that I think, and I've been debating whether to say it because it kind of scares me in a way, but one of the oldest kind of attacks about Bitcoin was about how certain like imagery was referenced by the Bitcoin blockchain. And that was like a big like, oh, this is an issue. This is a real significant issue with Bitcoin. Now, unfortunately, there's the opportunity to store this imagery on chain now so that every node has a copy of it. And that is something that could be a significant attack vector. That's actually a worrying thing because that's when there could be a very, significant boot coming down from the state saying this imagery must be removed, and that could have significant impact on the immutability of Bitcoin.
Yeah, not only it would definitely put something on me. I wouldn't want to run a full node if I know I'm hosting that content.
Well, this is really the best thing about the internet is you come up with a new software and you say, hey, it's free. And everyone says, I can put the most horrible things on that free website. And you guys are just thinking about the horrible things. Also, there's religious fights that could happen if you put religious images or other things, or political fights if you put images of the king and so forth. There's lots of problems. But we'll worry about that later. They'll just, for now, let it happen. Check out worldcryptonetwork.com where we've got On This Day on the left-hand side here. On this day in 2020, we had 3 shows hanging out with the World Crypto Network, LN Bits Extensions, and the 2020 Bitcoin Halving Party. Doesn't seem too long ago. In 2019, we had a chat with Francisco Renzi by Ben Ark, and we had Theo Goodman's First Computer, How to Encrypt Your SD Backup with Cold Card, and Bitcoin Coffee Break. In 2017, we did the 141st episode of the Bitcoin Group. In 2013, we had an episode of Mad Bitcoins and 2 episodes of Mad Bitcoins in 2013. Check out worldcryptonetwork.com. Moving on to issue 3. Bittrex approved to borrow $7 million in Bitcoin for its bankruptcy. Things are moving fast at Bittrex. At first, they warned U.S. customers to take funds out of the exchange, and now the U.S. version of the exchange, not the international version, has declared bankruptcy. What's unique about this is that they're getting a bailout loan in Bitcoin because of better fees and better options. They say all customer funds are safeu and everything will be fine, but this is the end of Bittrex in the United States. Victoria Jones, what do you think about the end of Bittrex?
Well, I think the salient point that it is mainly just in the US, and that's partly because the SEC decided to sue them and issue them with a big fine. So it's like, right, we're out of here, guys, before it gets any worse. And quite frankly, if I were in their position, I'd be doing exactly the same thing. And you've already recently had, Brian Armstrong over in the UK discussing, with Parliament about better regulations. I mean, the lack of regulation and the potential excessive regulation in the US is really going to be really hold them back unless they get themselves sorted out. And I have seen some of the senators discussing this and saying we really need to sort it out. So but back to Bittrex. I mean, clearly the rest of their operation is fine. I understand that the loan they're getting in Bitcoin is from their parent company, so it's not like they've gone to a third-party institution from this. It's like an accounting mechanism for them to borrow some Bitcoin holdings in their other business. So, the headline's a little bit misleading. It suggests that the whole of Bittrex is going down, but no, I think there are specific issues here. It doesn't sound like it's because they've mismanaged things or there's any fraud going on. I think it's just, part of the regulatory environment. But again, this is a brilliant thing about Bitcoin. that China says that all the miners have to shut down, so they move to the US. And the US senators are all particularly, either taking inaction or too much action. And so everyone goes, right, let's leave the US, go somewhere else. But, Bitcoin survives. The only people who suffer are the people who are under the stupid regulations, who can't get their act sorted out. And, so Bitcoin will go somewhere else until they have sorted themselves out. But by then, they'll have held themselves back to a considerable extent. So it's interesting to kind of like look at the bigger picture in terms of what else is going on. But in terms of Bittrex itself, it doesn't seem to be too much of a problem. Although I have to say, I'm not sure how I'd feel taking out a loan in Bitcoin as we're just about to enter another bull market. That doesn't seem very savvy. Although I did notice that part of their agreement was that they won't have, if it goes over 110% of what they've borrowed, they won't have to pay it back. So they've got around that one. They've thought that one through.
That's a good deal. I know some people on BTC Jam that had incredible loans in Bitcoin that they were not able of paying back almost instantly, and it would have taken their whole life to pay them back. It's so sad to see the U.S. go down the path of brain drain and scaring these companies away. We've talked about the need for proper regulation in the United States, as well as having a meet in the middle where we don't chase new technologies away for years. Andreas used to talk about it. He used to go to Congress. He used to meet with these people. All kinds of other people have also spent a bunch of their time trying to explain to them that, again, we can't chase this new technology away, and it will set us back in time. But again, we can't seem to learn from that. We're going to do it again anyway. Dan, Eve, what do you think about Bittrex and the trouble in the US?
Well, it just we were talking about this the other day with Coinbase, but it sucks, right? The Coinbase and Bittrex have been compliant, right? They've been trying to do the right thing. They implemented KYC, like when there was a whiff of that there was going to be an issue, and they've just been battered by the SEC, and it's just totally ludicrous because they're trying to actually comply, and they're trying to not negotiate, but get the talking on the table, get decisions made, right? And to the extent that Coinbase have had to force the SEC's hand to make a decision on whether Ethereum is a security. So, like, to cane people that are actually companies that are actually trying to make good of their business is just ludicrous, and it just it's going to drive business abroad. Like, you don't want to drive your businesses abroad, and this is clearly doing it, especially with Coinbase now going with their futures in Bermuda. Is it Bermuda? So it's just another example of the heavy-handed regulation, which could be more heavy-handed against the traditional finance system, which is screwing people on a daily, minute by second basis. There's it's obviously, as Victoria's said, that they should have enough capital to cover it all. So it's most of their business is actually in the Bittrex Global, but it's just a right shame. And I like Bittrex. I'm looking right now, and like in 20, I've got emails to Rami and Richie in 2014, like saying, hey, could you add this to the thing? And they're like adding, creating support tickets, like for them to add certain features to Bittrex. I'm a fan of Bittrex. I know, fair enough. It's, it was a shitcoin exchange, blah, 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 blah. But I like it. Where else would I have traded parking coin and all these other insane things? Voot coin, which I think Voot was the first thing I ever tweeted about in like 2013 or 2014, which was terrible and died like most of the other ones, 99.9% and all that. But it's just such a shame. Like when people put the olive branch, my mum always says, she's like, when someone's reaching out with an olive branch, try and meet them halfway. And Bittrex and Coinbase are reaching out with an olive branch, and the SEC is going no, and just like slapping their hand and then slapping them with lawsuits, and the whole thing's just ridiculous. And I hope they can just realize, or at least someone realizes how ridiculous the whole thing is, and actually put some cooperation on the table, because that's what they've been trying to do. And you're just going to drive business away. As Victoria pointed out, was it Coinbase that were talking to the UK? Imagine if they moved their business over to the UK, man. Like, that's a huge loss for America, like in terms of taxes and in terms of innovation and jobs and etc. So yeah, it's insane to be kicking off at people that are actually trying to do something good, even if they have shit coins.
Josh Shigala, it's like a Ayn Rand fever dream. I have to set you up for the ultimate libertarian question. Here it is. Even those who had, served the state end up like oxen in line, blinded, being whipped by the state. You can't even be the pro-regulation people. There's no victory even for them.
Yeah, it's true. Yeah, I mean, we see constant push for regulation in the States, and it's so weird because it's just this sort of blanket, we need more regulation. It doesn't mean anything. It's such a weird thing to say. It's like, we need more rules. What? Can we just be a bit more specific? I think this is a weird thing to yell. So yeah, I really find it horrible, and I think we'll see more people leaving, big companies leaving the States, because how much more of that can you take, where the SEC will just come after you and just smack you around the face, even though you've been really compliant and doing everything better than the banks. And yeah, I mean, that these regulators are run by the legacy banking systems. They're not regulating anything. They're run by them, and that was the case very clearly in the UK, and I see that happening. I mean, it's very clear in the States as well. They run around with this facade of independence, and but it's not. It's just it's a nice moat that the legacy system can build around themselves and use to protect themselves. I mean, it's called regulatory capture, and that's what they're doing.
I don't know what's been going on lately. I want to push back a little bit about Coinbase and other people allowing SBF and FTX into their space. There wasn't major pushback until CZ called them out and the whole thing went down. There wasn't this kind of pushback. There wasn't this kind of protection of the Bitcoin space. They're like, oh man, that guy's a scammer. They're going to find out eventually. Ha ha ha. They could have tried to warn people. They could have told people. I think part of this negative regulation or the fear of a crackdown is because they didn't protect the space from SBF. And now Brian and other people who are on the straight and narrow are being seen not on the straight and narrow, but as the next SBF. What do you think, Josh?
Oh, sorry, I was reading the chat. Listening to. Sorry, man.
All right, Dan, what do you think? Is Brian Armstrong too far down the straight and narrow?
Sorry, I was watching Joshua read the chat. No, they could have called him out more, but I think it's fair to say it's one of those situations where how much did they actually know about how much he was a scammer? From on the face of it, he was being shown, those interviews where it's like, oh, this is Sam Bankman-Fried. He drives a Skoda and like has flip-flops and instead of a Ferrari and blue suede shoes or whatever the hell they're going on about. Like, so there's all this positivity. He's being covered by CNN. He's the what's it called, the crazy Jim Cramer guy who's like going, yeah, Sam Bankman-Fried, this guy's awesome. He's being covered by everyone. So he pulled the wool over a lot of people's eyes. He had like that dude, the American footballer dude, have with a flamethrower, and he had Larry say that you shouldn't actually buy FTX or something like that, which was a really good contra sort of advert. But yeah, he pulled the wool over a lot of people's eyes, and I'm not going to, including mine, although I'm not really, on the face of it, he looked like a genuine character, especially with his like. I can't even remember the word of it now. Altruism is selective altruism, probably, rather than effective or whatever it was, altruism. So it's difficult to tell from the outset, like whether someone is totally evil and actually what they're doing with their money. Unless you're really involved in it, you may not have seen that Alameda was being so shifty with the money from FTX and these client funds being mixed and muddled, So I think on the surface of it is kind of right. We can easily say, why didn't Brian Armstrong kick off and protect the space? But how much did he actually know about Sam Bankman-Fried? How much did he really care about Sam Bankman-Fried? There may have been a case of this is just another shitcoin owner, so therefore what sort of what research do I really have to do? Oh, look, and it could have been a case of, oh, he was on the Kramer show, Kramer's shouting about him, he must be a good guy, they must have done their research. It's one of these things where you see time and time again, like with shitcoin ICOs, where as soon as one legitimate investment company gets duped into putting their name on the investor sheet, everyone else goes, oh, so-and-so, 3 Arrow Capital invested. They must have done their research. No, they're just literally throwing shitcoin money out here and there and everywhere. They didn't do their research. They just like ape in on something, and then everyone expects that they've done their research. So yeah, I think it's kind of difficult to say how much did Brian Armstrong know, how much did CZ know, until he literally reached the boiling point and had to kind of not come clean about it, but expose Sam Bankman-Fried about it. So I think that that Brian Armstrong is usually someone that kind of does speak up about this stuff. He seems like a genuine character, but then again, I thought that about Sam Bankman-Fried. So basically, don't ask me because I'm a terrible judge of character.
Well, it is interesting. To one point, maybe Brian couldn't call them out because he was be calling himself out as well. If he was to say, if we need regulation because people could just mix their books up, right? The Bitcoin's coming into FTX. We didn't know at the time. We know now. It was just going into one general account. It wasn't even being separated. The same way that Brian could warn them and say, well, what about that guy that took off to India and then allegedly died and all the keys disappeared with him? This could happen. That's why we need the regulation. So there are concrete steps, but maybe Brian couldn't say them because a lot of them are like, a powerful, charismatic CEO could really wreck this industry. And then, oops, that could be me. Victoria, what do you think about that? Brian couldn't expose himself. He couldn't. The possible failures that a CEO in the crypto space could face.
I just don't trust anyone who's making any kind of rules, because anyone who makes a rule is ultimately going to be driven by some form of self-interest. I mean, the whole reason we've got Bitcoin in the first place is because we've realized that governments are like utterly corrupt. And even with Sam Bankman-Fried, I mean, I'm convinced, I was from the beginning, that he was, I think someone, he may well have started off as a genuine person, but someone clearly played him. He was a good front with the effective altruism, gonna appeal to all those idealistic youngsters, but there was someone very sly and cunning, could easily put someone like that to the forefront in order to dupe a whole load of people, especially if they're motivated to skim off any profits that they're getting from a big crypto business. That you have to be very naive to not understand what was probably going on behind the scenes there. So no, I mean, I think the whole story of regulation and governments, I mean, they don't understand it. So what hope do we have of them actually making any decent regulation? I mean, to be fair, the fact that they've taken limited action up until this point is probably testament to the fact that they don't have the skills to do it, even if they wanted to. And actually, the best thing to do is probably leave it alone. The whole thing's going to completely disrupt government anyway, because the main role of government has been to manage the resources and working hand in hand with the banks. And with Bitcoin, we don't actually need them anymore, and that's a good thing. So yeah, I mean, I realize that there are bad things in the world, but when they first came up with this idea of central planning and Keynesian economics, there's always been poverty in the world. On the gold standard, you do get people who live in very impoverished circumstances, and it was reasonable to try and have a solution for that. But the solution 100 years down the line is not given us anything better. It's just reorganized where the wealthy people are. So, so I don't think using Bitcoin as a way of going back to the gold standard is a bad thing. At least it kind of resets the parameters and we can think about it again. But at the moment, everybody's losing with the existing monetary system that we have. And I don't have any faith in any rules. I think there are some good people in government who try and do their best, but ultimately, you just need a few rotten apples to spoil the barrel, and it spoils the whole system for everyone. So yeah, I think the less they have to say about it, the better. And the Bitcoiners just need to get Bitcoin ready before they do any more damage. Bring them down. Bring them down.
Yeah.
It does seem really like the only things that you can trust are on-chain transactions. But once again, everyone comes to Bitcoin and they say, hey, I could make a little business and attach itself to Bitcoin like Coinbase. And pretty soon you're like, on-chain transactions are too expensive and they're too much work and they expose our customer funds and so forth. So we need to build an obfuscation system to do that. And then you're doing that. And to go to Josh on this with another setup question, Josh's company went to a lot of trouble early on to make the Glassbooks protocol and make it so you could share how many funds you had, and we could see at least, in a number, there are 20 Bitcoin in the system. There's supposed to be 20, it works out. FTX allegedly didn't have any Bitcoin. They're supposed to have lots of Bitcoin. Josh, are you disappointed that people haven't used any of these on-chain tools, even just at a basic?
Absolutely.
I know it's insecure, but if you have 20 Bitcoin in an account and I look at your account, I can see they're there. Like for these companies to just go away from that almost instantly, and then to not offer even the any kind of a makeup for it.
Yeah, totally. I mean, when we invented the Glassbooks, we actually shipped it around to different exchanges saying you should implement this. I mean, it wasn't like we were going to make any money from it. It's a pretty simple idea, but it allowed for exchanges to be transparent and grandma friendly. Peter Todd and Gregory Maxwell had their version, which ended up being the one that they like Kraken users and such. But problem with that system is you just had a big green check mark that went bing, and you didn't know how it got there. So you just had to, again, trust the green check mark, even though the math was sound and, it all worked. But with the Glassbooks, people could really use it. But yeah, it was sad. When we shipped around, no one wanted it. And I was like, why? And obviously, that's why we created Vaultoro.com, to sort of show how cool it could be. And then realized that, well, most exchanges are probably in fractional reserve, and that's why they don't want it. And so, yeah, that's unfortunate. And the whole reason you go to Bitcoin, or Bitcoin was invented to get away from that fractional reserve system. And now we have a bearer-based asset, only 21 million. Absolutely, hold it on this exchange, and now we've gone 360 back down to back to where it was, and to this fractional reserve system. So even the gold, the gold standard can be a fractional reserve system. So yeah, you might have something backing it, or you might have actual assets, but if it's not accounted for properly, and actually the fundamental problem, even with the Glassbooks protocol, and FTX showed this, is that you could pull the wool over regulators' eyes and make written contracts in the background that nobody knows about. Say, I have this much money here, I'm going to write a contract with this third party saying, hey, I'll give you some of this if I screw this contract up. No one knows about this contract. It's not provably anywhere else. So you can skirt around issues by just making the party that made that contract with not talk to that party or with anyone else. And so proof of liability is really what the, along with proof of funds, is kind of the two things. And in a way, I think Barry Silbert here had it right, except he had the wrong day. He had it right to say, just everyone take off your Bitcoin off of the exchange on one day every year and see who sticks around. Now, the problem with Barry Silbert was he made it like on the 3rd of January, when most business, and pretty much every business, has a skeleton crew, and you don't want your private keys to be so easy that a skeleton crew can sort out all the cold wallets and everything all the time easily. You want there to be proper security. So it would have been nice if Barry said like 5th of May or something in the middle of the year where there's no major holiday time. could have been a good time to have, that remove your coins from an exchange day.
I think it was Trace Mayer, Barry Silbert's
Oh,
company
Trace Mayer.
with
Sorry.
DCG Group and all of their various investments. But I think we're going to move on to the next issue, issue 4, and then we're going to go right back to Josh. Tether posts massive first quarter profits of 1.48 billion. We've talked about Tether before. Basically, my understanding, they hold allegedly some USD in account. Then you can hold an altcoin that represents the value of that USD. 1 Tether equals 1 USD. This allows people to hold, in quote marks, a USD on an exchange so that if they're nervous about the price of Bitcoin or altcoin or whatever, they can duck into USD and then feel safe. But this all, again, relies on an external system that apparently is making the Tether company $1.48 billion. Josh Shigala, what's going on with Tether? How are they making so much money?
Well, they're gambling with everybody's funds. That's how they're making so much money. And that's why it's extremely dangerous. Yeah, they're winning, but a gambler's a gambler. And gamblers, the house always wins, not the gambler. So the problem with Tether is that it's the same system. Again, that 360, we've gone away from the banks and gone now to the same thing, fractional reserve. So they can take all the deposits that have been made by all the exchanges that have bought Tether or all the people that have bought Tether. And basically they made a really good bet at the low of the 2017 market. I think if my timeline's correct, I can't remember. When it crashed, right near the bottom, they piled everything back into Bitcoin. So they took their deposit funds that's meant to be $1 in the bank for 1 Tether, and they piled it all into Bitcoin. Bitcoin skyrocketed up and did a huge big moon bump. And of course, Tether company's stoked. They're way over fractionalized, like over reserve. And so that's great, it's fantastic that they're there, but it could have gone the other way, and they would have been totally under collateralized.
Didn't they tell everyone that they were holding the money in USD, not that they were gambling with it? Then it turned out that they were holding most of the money and gambling with some of the money. But like you say, Josh, because they won their bet, there's no punishment. Whereas if they had lost their bet and the price of Bitcoin had gone down, this would have been yet another circling FTX exchange, right?
Yeah, absolutely. And this is, this is why we're building the standard. We have to have better stablecoins that are basically holding the value in a decentralized mechanism where thousands and thousands of people are locking up real rare numbers or real rare assets into contracts and issuing themselves debt against that. This is really where we're focused, to build the ultimate stablecoin that's not nobody has got the ability, when you lock up funds on the standard, to use those funds to speculate with them. They're yours. You hold a private key. You don't, not your keys, not your crypto. That's the main mantra, and that's what we got to stick to.
Victoria Jones, I've never understood why people would want to use Tether, but now that they're making $1.48 billion, it must be incredible, right?
Yeah, just imagine what the price of Bitcoin would be if all that Tether was actually in Bitcoin rather than Tether. But you're right, part of the problem at the moment is so many people are conditioned by the fiat world. I mean, I've said in a podcast a number of times that, no one under the age of 50 has ever known anything different, because it's been around for such a long time. And so people have gone to university and they've done degrees to understand economics in a particular way. It's like my daughter's studying, GCSE economics at the moment, not teaching her anything about Bitcoin to such an extent, if I talk about it, she just still rolls her eyes, and it's just like, it's okay, kid, the fiat world's conditioning you. You'll figure it out eventually. And so, this is part of the battle that we're all up against. And of course, a big part of the problem is, USDC had come out, and you had Mr. Wonderful going around telling everyone that USDC was going to be the new US digital dollar. Next thing we know, it's losing its peg. You know, and I think that's partly what's contributed to the recent run in Bitcoin, because, you know, it's one thing the bank's failing, but the stable coins failing. It's a whole different ball game. And so you had a lot of people who were in USDC who moved over to USDT. So, you know, that will have helped. I mean, at one point, I think the value of USDT was actually above $1 because everyone was trying to get into it so quickly. So there are other things that are going on behind the scenes. But, you know, this article must be particularly sickening to all those people who've been predicting USDT's demise since the beginning of time. I mean, there's been plenty of them around. And you know what? Eventually they'll be right. And it'll happen, you know, it'll happen when the US dollar goes down. I mean, if they're backing their USDT supposedly with US assets, or even if they're gambling with it, you know, the moment the rest of the financial system breaks, which is what we're anticipating, that will be the end of USDT. And if you're still holding USDT when that happens, it's as bad as having had that money in the bank. And so, you know, you take your risk. You know, some people will get burnt by it eventually, but you know, timing is everything. And, you know, it's really hard to predict these things exactly. We all know it's going to happen. It's just a question of when.
Yeah, and it'll hurt Bitcoin as well. In
Short
that
term,
moment,
yeah.
price, short term, yeah. And you're spot on, and not enough people talk about it. There's another banking crisis, and we saw this with USDC, with Silicon Valley Bank. If there's a full-on banking crisis where bank after bank after bank fail, well, where are those assets that are supposedly backing it? And you know, we're such a global society now. It's not just US banks. US banks knock on then French banks, knock on Italian banks, knock on German banks, and everything just tumbles. You know, this is why some of the stable coins are jumping into like government bonds and stuff. But now, oh, what? Hang on a minute. You know how you print a US dollar? Well, you print it by the government sending government bonds to the Fed. So have we just recreated the entire shit system? Yeah, we have. So why use it? Why not use, why are we thinking inside the box? The whole point of Bitcoin is to think outside of the box. And that's important.
It is really interesting to see the different values of these companies. I know when I worked at Bitcoin companies and we had user deposits, our goal was to keep them in the user accounts, not to let the programmer run off with them, and certainly not to take the user deposits in mass and reinvest them like FTX and Tether did. Although apparently if we did that, we would have been a more profitable company, and we could have, if we had won our bets, we could have been more successful. Dan, Eve, what do you think about this radical idea of Tether making tons and tons of money with other people's money?
Well, there's obviously a lot of haters on Tether that like Bittrex. He definitely hates Tether, and you know, for good reason about their crazy practices. I think it gained a lot of like popularity because obviously Bitcoin swung quite a lot, and back when Tether started, when you wanted to come out of Bitcoin, there were the premiums for going back into USD. Normal USD were a lot higher, right? So there needed to be something in there that reduced those premiums, reduced the spread of going from switching from Bitcoin to back to USD, if you know, for these day traders, which then like proliferated into all sorts of shit coins and became the like the trading coin of the stable coin, right? It was to like get into a shit coin, get out, get into Bitcoin, get out. And now we can see that, you know, it's really got a hold on the general volume. I mean, it's 27 billion. It was funny. It was 25 billion when I actually made the note. 25 billion of volume is 27.6 billion of volumes now over 24 hours. Which is, it's like 1.5 times the volume of Bitcoin, because it's used to basically trade every other shitcoin out there. It's still like 3 times the volume, more than 3 now, the times the volume of Ethereum that's traded over 24 hours, and insanely, it's 55 times the volume of Binance coin, which is the 4th in line in terms of market cap. So it really is, and this is consistent, right? It really is the most traded currency out there, and it's because people use it as a gateway drug. It's a gateway to shitcoins, right? So Bitcoin is the gateway drug, and people end up going to shitcoins because they think, oh, I'm not going to be able to make these insane gains like other people did on Bitcoin, so I'm going to go and buy Flappy Coin. And general disclosure, I was dumb enough. I didn't actually buy it. I just mined it for like 6 months. But anyway, but now USDT's got a hold on everything, but it's still, I don't think it's had a massive depegging. Not like, obviously UST's dead now, but USDC and even DAI, right? DAI went down to 88 cents, which is terrible. And the wider impact of that was that a lot of smart contract, or not a lot, some smart contract writers were lazy enough to just put the price in whatever it is a thing that they were creating. The smart contract, the price of UST or USDC or DAI as a 1-to-1 to the US dollar. So a lot of people got caught out and wrecked by these protocols that when it depegged, people were able to take advantage of it, and other people lost out massively because of the depegging and this lazy 1-to-1 effort rather than actually tracking the market value of the stables. But this is how they're making money, right? So Tether, they're making significant money because it's so insanely traded. And it's probably going to continue that way and probably just keep on growing. I'm not sure what the all-time high market cap of was Tether, but we must be around it now. It's 82.7 billion market cap, which is huge. It's the top three, and the nearest one to it is Binance at 47 billion. So there's a huge gap. It's definitely a significant asset. Obviously, the fact is that, as Josh and Victoria pointed out, is this gone full circle into trusting this stable coin, which is just it's just like a digital version of fractional reserve lending. And also it goes against the principles of not your keys, not your coins. So, it's still, although you own the keys to USDT, you don't own the underlying assets behind it or know that they definitely exist there. So you can still be caught out in the same way that you would by having your Bitcoin on an exchange, or your Bitcoin in a lending product, or your or your money in the bank, which could just disappear out of nowhere. There's a lot of risk to having Tether. It hasn't really stopped its growth ultimately, and there's a lot of people that have kicked off about it and tried to expose it, like Bitfinex, or expose the issues around it. Necessarily, they may not necessarily be ultimately terrible. It might be kind of a bit of hyperbole or whatever, reading in between the lines. But ultimately, I don't think this freight train's going to stop. They're making a lot of money. I know it's obviously a bull market right now, or I say bull market, as in the last quarter has been from 15k Bitcoin up. There's about 2% of their assets actually in Bitcoin, so they've benefited from that. I don't know. I think it's just not going to stop anytime soon. USDT is going to be here for a while. There's going to be more stable coins, as in of actual dollar tracking ones. So just be careful. Be careful. Put on your safety condom, as they say in that film. With
just
Steve
quickly,
Martin.
Dan, I do want to push. I do want to push back on the comment that you said that they're gambling with other people's money. They're not. If you look at the terms of use, you are buying one US Tether, USDT. So you're buying the token. Once you've handed that money over, that's their money now. Just like the banking system, when you put money in the bank, it's their money. They just promise to pay you back the same amount. Most of the time that works, but when it doesn't, it's catastrophic.
Yeah, I agree with that.
It is interesting to see people learning the difference between having Bitcoin that you can send from account to account on the blockchain versus having money in an exchange, or having USD in someone's account, or $20 that you owe to Joey. It's like you can influence Joey to pay you back, but you can send the Bitcoin around. And there's a big difference between that influence level of, oh, we have a contract, they'll probably pay us back. Oh, they have a contract to hold our money in the bank, they'll probably hold it for us, versus actually having that Bitcoin. And of course, as everyone knows, on a long enough timeline, all stable coins lose their peg. But we've got to move on to the last issue. It's a really short one. Issue 5. BlockFi customers lose fight over disputed fund coin transfers. The bankruptcy judge rules transfers as of November 10 are void, making losses more likely for interest-bearing accounts. BlockFi users during the bankruptcy tried to change their assets over from dollars in a loan account to Bitcoin in others' accounts. It turns out they're not allowed to do this. They have to take what they had at the time, not your keys, not your coins. Victoria Jones, what do you think about BlockFi and now suddenly Trace Meyer's law being actual law?
Yeah, well, I mean, I think it goes back to the fact that, you can warn about these things for a long time and you can get away with it for a while. I mean, some people did do well earning money, earning interest on their crypto, but, the warnings eventually catch up with you. And this is one of those warnings that's finally caught up with people. Anyone who deposited their crypto to earn interest on it then got confiscated when the business was bankrupt. And, it's fair play. It's like, that was a small print. If you didn't read it, there's no going back. And of course, sometimes you just have to learn the hard way. And clearly some people did. So yeah, very sorry to those that have lost out, but you were warned.
Well, I remember the tweets where Peter McCormick was doing his Lambo math. And he's like, oh, if I just deposit my Bitcoin in this company and they pay me interest and I get a free Lambo, what could go wrong? And I think it was Jameson Lopp or someone, serious like that. And they're like, you could lose all of your coins. So you get the interest, you get the Lambo, you lose the probably 10, 20 Bitcoin, far more than a Lamborghini's worth, like 5 times the amount of a Lamborghini, something like that. You would be risking and would, as it turned out, have lost. Dan, Eve, can I still get you a free Lamborghini?
Oh, it's savage. It's another sharp and sad reminder that you're entrusting your wealth with someone else, whether it's all of it or a portion of it. Anything with mad gains or even just gains involved is there's always risk, right? Even holding your money in a bank with an interest rate with a tiny gain of whatever they pay you, the pathetic amount of interest, you're still at risk of losing it. Obviously, there's up to 80K or something in the UK is guaranteed, but ultimately, there's obviously a process around that and eventually getting back your money, blah, blah, blah. But if you don't hold your own asset, you're not the master of your universe, as it were, the master of your own destiny or the mistress of your own destiny. Although that sounds, that's a bit, you know what I mean? Like you don't hold your own future. Right, at least you get to decide. If you screw it up and someone else steals it from you or whatever, the way you stored your private key, at least you did it, and at least someone else, like you didn't give that money to BlockFi or Celsius, because that's what happened with Celsius, right? It's the same thing. They ordered that, well, you gave your money to Celsius, so unfortunately it wasn't yours as soon as it left your hands. You're expecting gains back, therefore unlucky, mate. If you do need to use an exchange in any way or a service, like the best things to do is ninja in, out, deposit, trade, withdraw. And then, so at least you're actually holding whatever it is straight away. Obviously, probably the best way of trading, if you really have to, is to try and use some sort of decentralized service. We were talking about what's it called last week? Sovereign for Bitcoin. Like that's one of the services that's decentralized, but that's still got risk, right? There's still risk associated with it. There's still risk of using Uniswap, that you're going to get front run or something crazy like that. So basically, don't move your cryptocurrency anywhere, because everyone's going to attack you, and just keep it there forever. But no, at the end of the day, the interest that you want to receive on your Bitcoin shouldn't be from lending it out. The interest is the the countering of the inflation that happens on your fiat money. So, don't go chasing dragons because you're putting yourself at risk. Just hold your Bitcoin and you'll benefit from the fact that eventually it will go up, and you won't have to risk giving it to someone who says, I'm going to give you 2% back a year, and then ends up losing it because they've squandered it on some other venture that you weren't really a party to. Because as Josh said earlier, they might even have the assets there, but they've got a subcontract where they've loaned all the money out to someone else that isn't auditable, or, from that respect. So yeah, not your keys, not your coins, all of that, all of that dibble dabble stuff. And yeah, just if you really have to, try and use something that's decentralized and tried and tested, right? Because then there's, you're reducing the risk of something being intercepted and jibber jabber from all.
Well, we went through a lot of that back at Jam. I would say, wow, people are investing 100% of their money to get maybe a 5% gain. But if they lose 100% of their money, because we didn't even have kind of like a loan buyback floor or any kind of way for people to get out. So it would just be wrecking and crisis. And like Dan said, they may have, $80K insurance or $250K FDIC insurance here in the US, but that would wreck most people. You would be filling out forms, waiting in line to get your funds. You wouldn't be able to buy any food. It's not like we live in the, video game generation. You're like, oh, I have an extra life, and it happens instantly. Your funds would be wrecked for months. You would probably be borrowing and losing money because of credit card rates and other things. So it's not just insured and it just comes back. It's a whole process.
Plus, you would see massive inflation if that FDIC fully kicked in.
Well, yeah, because they don't really have the money. They're just going to print the money if there's a crisis, and they'll return. You'll get money back, but it'll actually be less valuable money, as it turns out. But nobody thinks of that much, Josh. So, but we're running out of time, so we're going to go to prediction or story of the week. Dan, Eve, are you ready with a prediction or a story of the week? Go ahead.
You always pick me first, and I'm never ready. So I'm going to go with something that's upsetting me after I thought about it earlier. And I think that someone's going to put something naughty on using ordinals on Bitcoin, and that's going to cause a whole kerfuffle.
There's a whole South Park episode now that you can't watch anymore. Something happened, something's blurry, something's not blurry. He's in the clown suit. No, he's in the bear suit. Josh Shigala, what do you think? Prediction or story of the week? Go ahead.
A prediction. Well, the story of the week is we're getting very close to finally launching the smart vaults on the standard. So we're really amping up. So all of the stuff we talked about today with BlockFi, all of that is history, because you're not letting go of your private keys. You're basically locking up funds in your own smart vault, and you hold the keys to that, nobody else. And then you're minting stable coins against that collateral, and it's always less value than the amount locked up. And just quickly, why we're different is that we're working. Our main shtick is collateral management. So you can trade your collateral that's locked up, even though you can't withdraw it, borrow against it, but you can trade it. So if the whole market's shitting the bed, you can trade it into like a tokenized gold, something like that. Now with tokenized gold, there is counterparty risk because there's gold there, but at least you might not get liquidated. Or you can sell your smart contract as an NFT. So you can sell your debt and collateral as an NFT, which is also really cool. It's like what we saw in 2008 with the financial crisis, the housing market. Imagine if they were NFTs, these CDPs were NFTs. People could have looked inside all of those NFTs and actually seen what was in there. So that's you run some software and you see, oh look, half the loans aren't doing that well. So anyway, it's really cool tech, and I'm very excited because it's been 2 years basically of engineering and thought put behind this project.
That's great, Josh, and people can check it out at thestandard.io.
Yep.
Victoria Jones, prediction or story of the week? Go ahead.
Well, my story of the week is my website has now been translated into English to French and Spanish. So it's including all the newsletters. And I've now got a lightning paywall on the newsletters as well, only a small amount, but in order to give people the opportunity to see how it works, if they haven't got a lightning business nearby. And I shared this in one of the chats that I'm part of, and the immediate response I got was, how's that gonna help adoption if it's all behind a lightning paywall? And I was like, well, there's nothing like demonstrating how it works to get people to learn. But taking that on board, I thought I've also put in a little section where if a business wants to sponsor taking down the lightning paywall for a month, it's only for a small amount, and then I can put an advert in the newsletter when it gets shared around.
That's cool.
So I thought that was a cool innovation. So having my lightning node and having my own website has given me lots of opportunities to kind of experiment with different things. So that's just the beginning, and we'll see where it goes from there. But I'm quite chuffed with that. It's I spend hours paying lightning payments for my own paywall. It was just like so exciting, and there's like confetti when the transaction clears and everything else. So if nothing else, I'd encourage people to give it a go, just see the confetti, because it's very rewarding.
That sounds great. And early.
What's the website?
Go ahead, Josh.
Oh,
Oh, sorry. What's the
satoshishpage.com.
But yeah, early articles on Bitcoin Magazine by Vitalik Buterin actually had a QR code, and he would put like half the article up, and then if he got like a certain amount, he'd put the rest of the article up. So it's neat to see these ideas coming back. My story this week's all about my Oakland A's, who, as expected, are a complete clown show. I warned people in my article that Las Vegas should not get involved, and look, it's already happening. The Oakland A's had a so-called binding agreement with a 54-acre lot, which would have allowed them to build the ballpark village, all the housing and restaurants and bars where the team would make money all year round. Now they've traded off that 54-acre lot for a 9-acre lot where they can barely fit a ballpark. The only similar sized ballparks are Fenway and Wrigley Field, which are like 150 years old each. So complete disaster for the Oakland A's. The cheap owner is just moving them to Vegas so he can sell them for more money than he paid originally, screwing over the people of Oakland and screwing over the people of Las Vegas in the future. So really exciting stuff as they continue to just be a clown show. Like you heard the words binding agreement. You're like, oh, they're going to have to buy that land. Not these guys. Not these guys. So I know no one watches baseball here, but it's hilarious. They're just a train wreck on top of a train wreck. And it's been great to watch, and we'll see how it ends. But we're running out of time. Thanks to everybody for giving us a thumbs up and pushing subscribe down below. We'll be back again next week. Until next time, bye-bye.